panel discussion. And what I would like to ask everyone who is not on the panel, if you could mute yourself, and we will start then with the panel discussion and with the introduction. All right, perfect. Thank you so much. So I want to welcome everyone today to our virtual SME forum. As you have heard probably from many other virtual forums before, we have some ground rules here. So first of all, I want to introduce myself, who have not met me yet before. My name is Gerrit Ahlers. I'm here with the German-American Chamber of Commerce in Chicago, and I'm the Director of Consulting and Corporate Development Services. And together with my team, we support German companies in either entering or extending business here in the US. As I mentioned before, you are all muted if you're not on the panel. If you know Zoom, for instance, there is a chat function. So please feel free to use the chat function if you have any questions you want to ask our panelists. We try to incorporate every question. At the end, we are also trying to have and planning in some Q&A sessions, so then you can unmute yourself. And then I would like to ask you to quickly introduce yourself and then ask the question. And then together with the panelists, we can answer all the questions. If you have any technical issues, please also let us know. Use the chat function. We have Laura and Brooke here today in the background, so they're here and they can help you as well. All right, having that said, I would go to the next slide. And of course, just double checking, we're today, panel 3, making successful financial decision in a tumultuous year. So if this is not the title you sign up for, then you're in the wrong panel, but you're welcome to stay. And without further ado, I would like to seize the opportunity to introduce today's panelists. So we have Christian Hock from Rödl & Partner, we have Antonello Bacci from Deutsche Leasing, and we have Daniel Griffith from Huntington National Bank. And having that said, I would like to give the word to Christian to quickly introduce himself so the audience actually knows a little bit more about each and every panelist today.
Thank you, Gerrit, and thank you for inviting me to this lovely event that I really also like to attend every year as a spectator. I'm with Rödl & Partner now since almost 11 years as a partner in the Chicago office alongside Matthias, and taking care of our German inbound business. I'm originally from Berlin, Germany, grew up there, with my schooling there, did a little bit of my schooling in the US as well. I'm a CPA, equivalent of a Steuerberater, Wirtschaftsprüfer in Germany, here in the US, and work on our German-speaking inbound business, both on the audit side as well as on the tax side. Whoever does not know Rödl & Partner, Rödl & Partner is a small and medium entity sized business in terms of a CPA firm, founded 1977 in Germany, in Nuremberg. This is still where our headquarters is, and then we gradually expanded into first of the closer European countries, and basically we went wherever the German companies went to service them then in those, as we call them, satellite countries as well, wherever they had their subsidiaries, and since 2000 as well in the US here. Worldwide, we are located in about 109 offices, 49 countries, a little bit over 5,000 employees. Here in the US, we have 8 offices, Midwest, Southern, and the Bible Belt, wherever the German companies are mainly, obviously heavily driven by the automotive industry. Our youngest office is our Detroit office, which we just opened during the pandemic year last year. I'm very, very proud of that it still worked out, even though it was a pandemic year. We still do a big opening celebration, but that obviously had to be postponed. Thank you.
All right, thank you so much for the introduction. And then I would like to pass on the word to Antonello.
Yeah, thanks. Thank you, Gerrit. Thanks for having me. My name, as Gerrit said, my name is Antonello Bacci, and I had the German desk business unit of Deutsche Leasing here in Chicago. I was born in Switzerland. I have Italian roots, but I grew up in Switzerland, and I joined Deutsche Leasing almost actually 8 years ago. I used to work before for another US bank, for GACC, where I spent most of my professional life there in sales roles. And yeah, also a few work to Deutsche Leasing for those who don't know Deutsche Leasing. Deutsche Leasing is the competence center of the Sparkasse Finanzgruppe, the umbrella organization representing the around about 380 independent public saving banks in Germany, and supports worldwide in 24 countries German subsidiaries in their capex investments. And this is mainly the responsibility of the German desk business unit, but as well we support German manufacturer when it comes to sales financing. So we finance their local customer when they are buying their machines. And yeah, this is mainly how we are organized. Deutsche Leasing opened its store in Chicago in 2007. And over the year, the organization has grown to 34 employees. We manage now roundly a portfolio of 900 million US dollar, which has been generated mostly with SME customer. 95% of our customer are SME customer. And yeah, that's it about me and Deutsche Leasing. And I'm really looking forward to some interesting discussion today. Thank you.
Thank you, Antonello. And then the last panelist to introduce himself is Daniel.
Last and no doubt and undoubtedly the least with impressive resumes from the other two folks. Gerrit, a special thank you to you and the whole organization for having me here today. Christian, like you, I grew up outside of Berlin. In my case, it was Berlin, Ohio. So we have some commonalities there. But I had a chance to go to law school at Ohio State and have been a practicing attorney for many years. And for the last about 10 years, I've been in the banking industry, working with private banks, and in particular, Huntington Private Bank, where I'm lucky enough to serve as the lead of a group we call the Wealth Strategy Group. Huntington Bank itself is a Midwest-based bank with a large presence in Chicago and really huge presence in Michigan and Ohio. Columbus, Ohio is our headquarters. It's a $150 billion bank, and our private bank specifically is about $22 billion, or I'm sorry, $22 billion of assets under management. We recently acquired a TCF Bank, which will hopefully, knock on wood, we'll have legal day one here in a few weeks. And TCF also has a great Chicago presence, so we're excited to take what was already a robust group and make it a lot bigger. But really great to interact with businesses all throughout the Midwest, which kind of makes our bank unique. In my case, what I get to do every day, all day long, is work with business owners and advise them on legal, tax, business succession planning, and estate planning in a broad sense. And we work with a lot of family offices and do a little bit of M&A advisory work as well for businesses that are doing that too. So glad to be here today, glad to answer some questions, and really glad to get some knowledge from the other folks who are participating. So Gerrit, I'll turn it back to you.
All right, thank you so much. As I mentioned before, if you have any questions in regards to our topic, or even depending on what the conversation, where the conversation goes, please use the chat function, or at the end we have a Q&A session. So having that said, since last year, the world has dramatically changed, as we all know, thanks to COVID. So the US has, for instance, reported close to 33 million corona cases and north of 582 deaths. Since then, a whole series of economic stimulus and aid programs totaling $6.4 trillion US have provided financial relief for companies with up to 500 employees. At the same time, the US Federal Reserve provided loans at extremely low interest rates to large corporations that had only been sporadically affected by government aid. Many people, as we know, have lost their jobs or had to adjust. Same thing for companies. I mean, a lot of people from us, for instance, are working from home. They're working from different states, but also some people start visiting their families, maybe abroad, you know, I mean it in Europe, Canada, or also maybe in other regions of the world. So basically, the daily life we know, especially our work life, has changed. So having that said, there also are several implications of course, taxes maybe, for instance. And the first question I want to ask you, because as you know, some of us are, as we can see, working from home, joining us from home right now. So in an ever more remote work setting, how does it affect, or how does working from home affect your company's requirements to also file taxes? We know we have 50 different states just alone here in the US with different regulations. So Christian, you're as a CPA, can you tell us a little bit more about, especially how the last, I mean, we're now over 1 year in this pandemic, how this has changed?
Sure, yeah, and that's a great and important question. As you mentioned, yeah, we have 50 jurisdictions here, and that's on a state level. And if you really want to add up all the municipalities and cities that are joining the bandwagon of a city income tax and what have you, there's actually a lot more than just 50 jurisdictions, but the 50 states are certainly the most important ones. And to understand and appreciate the problem that could be at hand here is to understand the word, what we call nexus. I think it comes from Latin originally, and it means sort of a connection point. I never had any Latin in school, but my understanding is that's where it comes from. But it means sort of a connection point, and it basically establishes the right to or gives the right to a state to tax you either as an individual or as a company. And it needs to be seen differently or interpreted differently depending on what tax type we're talking about. I mean, there's many different tax types that a business or an individual has to consider. The most, I guess, well-known and important one is, of course, the income tax, where your income is taxed. The other two ones I would like to mention that are important in this context is certainly sales tax. Go to a store, whatever you buy, consumer product, you're typically charged a sales tax based on the rates in effect in your jurisdiction. And then, of course, payroll withholding taxes, which is nothing else but your personal income tax that is just withheld from your paycheck. But even that has great implications for businesses. And so the right of a state to tax you is typically established by this nexus concept, which prior to COVID was not always just established by the sheer fact that you had a physical presence in a state. That was typically the most clean-cut, least interpretation needy issue. When you had a warehouse somewhere, as clear as mud that you had nexus in that state, and your company is now subject to income taxation in that state. Now with everybody working from home, because having employees in a state is also considered a physical presence in any given state. And especially if you are a company that operates close to interstate lines. I mean, just think about New York City, right? Half of the Manhattan workforce probably lives in New Jersey or lives in Massachusetts because it's just such close proximity. Even us here in Chicago, there's a good chunk of people that probably lives in Wisconsin or lives in Indiana. And now when these folks all work from home, and not just sporadically, but almost permanently or for a longer period of time, technically that gives the states the right to say, yes, you do have nexus in Indiana or in Wisconsin, or even though your office used to be in downtown Chicago. And thus far, so this physical presence concept, thus far, the states sporadically have addressed it during the pandemic, typically not necessarily with legislation, because that's a longer process, but sometimes also with just guidelines and regulations and notices. That they would say they would be temporarily suspend certain concepts, or because somebody is forced because of the pandemic to work from home, that person does not make the company that he's working for subject to income taxation or sales tax in that state that he is living in, right? But that's very few and far in between. So unfortunately, at this point, the answer to that question is, as always, a little bit clear as mud. It highly depends on what state you're in, what state your employees are working from home from, and then to see that those states already issue any regulations or guidance on that. And I think it's not just an issue on what happens during the pandemic, but also if you just think a little bit further ahead, this pandemic cause many businesses to think a little bit further ahead and like, what is my work life going to look like when this is all over? And a lot of employees got very comfortable and used to this working from home, and they probably want to keep that to some degree, right? So I don't think we're ever going to go back to the status that we had before. So this is going to be an ongoing issue for sure.
So there will definitely be then some adjustments and regulations, I would assume. I mean, just as a good example, I think it was Ford, for instance, they closed a couple of offices and announced that everyone now permanently works from home, I think.
Yeah.
Okay. Well, thank you. That's, I mean, this is something.
The company, if I may just add that the smaller the company, typically the smaller the tax footprint is, right? Mm-hmm. And let me say the Walmarts and the Amazons of this world, they already file in every state anyway. It shifts it a little bit around for them, but it doesn't really have a big impact for them as much as it has for a medium-sized company that maybe is filing in 3, 4, 5 states, and now all of a sudden it's 10 states or 20 states, right? So that has a big impact for them, for sure.
Okay. Well, then next question. At the end of 2020, for instance, 74% of small business reported experiencing negative effects from the COVID-19, and somewhere around 73% of small businesses received the Paycheck Protection Loan. So there are several programs also, as I mentioned, implemented for this during this administration, but also the previous administration. And the question I would say is probably best suited either for you, Daniel, but also for you, Christian. So what are the best financial, or what kind of financial support is available? So especially now that the economy rebounds, that, you know, we see a push that companies are more and more opening up. They're hiring employees. We also see a lot of interest from abroad. And what were the most successful ones that were available or still available out there? Dan, do you want to start with that question?
Sure, I'll jump in. Proud to say that at Huntington, we were able to do 30,000 PPP loans on the first round, which was really remarkable. And I think one of the biggest lenders in the country. One of the conversations that we're having right now is how do we take that relationship and move it to the next step when it comes to the health of those companies, making sure that they're able to do that. I will tell you, in the conversations that I get to have with a lot of clients, very sheepishly, many of them personally have looked at the process and said, you know, 2020 was a tough year. There were challenges. There's no question about it. But from a financial standpoint, I think a lot of people walked away in a much more healthy standpoint, from a much more healthy position than they have been before. And I think we're seeing that personally too. The savings rate, as was reported recently, is, you know, hovering near 30%, which I mean, that's Japanese kind of numbers when it comes to savings rates, which is really impressive. So I think a lot of businesses are experiencing the same thing. So the fact that the second round of PPP and some of the other incentives that were out there really required businesses to demonstrate a lot more need, I think that was helpful and has been a little bit more effective. The definition of success will also be how much political capital do various parties in the legislative sense make out of some people who have received these funds. So I think there's still plenty to come there. And it's one of the reasons we saw a couple employers who initially took PPP funding return those dollars to the federal government. And it, you know, in quiet conversations that I've had with some clients, some of them said, you know, I'm really scared about having to be called in front of a congressional committee or being the cautionary tale. And so they've been careful about that too. But it does look like there's been, you know, a retention of employees that has helped a lot too. So I think the PPP programs, there were some very specifically tailored programs that were designed for the restaurant and hospitality industry. I think it's a little early to see whether or not those have been successful, or the fact that the economy has rebounded as effectively as it appears to have is good. I'll tell you that I was lucky enough to go out to lunch before I was jumped on this call here today, because I'm an hour ahead of you guys, so I had a chance to do that. And the restaurant was pretty full, which was good. I was really glad to see that. It's a place that I hadn't been for over a year. So I think people are excited about that too. But I know with certainty, because we've worked with the client, that restaurant did benefit from some of the incentive packages that we talked about before. So we'll see if there's more to come. I'll tell you, the employers we're talking to are also now saying we need help incentivizing people to come back and work. So I think we'll hear a lot more of that discussion as we move forward. I think, Gerrit, we might talk about that later. So we'll save that for later.
Sounds good. Thank you. Christian, what do you think? What are the the most successful incentives or the programs they implemented?
Yeah, I mean, I wholeheartedly agree with Dan here. If I would have to rank it, the PPP program got the most notoriety, the most funding, and was certainly the most successful one. There were two rounds. One came very quickly with the CARES Act. Obviously, this was legislation put together, and it had to be put together very quickly. And whenever you do something like that that affects the entire nation, do quickly, there is always some confusion and some things you have to clear up after the fact. And so it happened with the PPP, understandably so. 2 rounds. I want to say, correct me then, the second round just ran out. It was targeted until end of May, but it already ran out of funds, excluding some minority funding, right?
That's correct. Yeah, and it was an odd situation where initially it looked like the money was going to be around for a really long time. It did require some different, there were some different requirements than the first round, but it looked like maybe the funding was going to be available for a really long time, and then it quickly did run out. So I think once the word got out, I would never suggest something inappropriate, but maybe some people kind of adjust their balance sheets to see if they would qualify. That may have happened in some cases, but you're right, it did just run out. Absolutely.
Yeah, that's what I heard too. So, I mean, initially there was quite a bit of confusion in the business community on how to get the loan, who is eligible for the loan, especially in the audience, I think, of this group, foreign-owned businesses, how to logistically implement that, because there were questions asked about ultimate ownership when you apply. What's the social security number of the owner in Germany? Well, gosh, that person doesn't have a social security number. So to just implement this administratively was really quite a heavy burden that was thrown upon the SBA, and unsolicitedly, the banks were just basically commissioned as an agent to administer this, and we're a little bit caught off guard. And I don't mean this in any way disrespectfully. Again, it was unsolicited, and they would just say, okay, from today to tomorrow, you can now administer this loans for millions of applicants, and they all need their money yesterday, please. So this was certainly no easy task. And the SBA then continued to issue these FAQs and these updates for all these questions that came up, especially who's eligible, the 500 employee threshold. Does that mean my US employees or my worldwide group employees? That went back and forth until they finally issued clarity on that and basically said everybody before a date in May, I think it was May 13th, was kind of grandfathered in. But then after that May 13th date, that unfortunately precluded quite a bit of the German businesses or foreign businesses, because on a group basis, they were well over the 500 employees, even though the US employees were below the 500. But it was foreseeable. I think overall it was still a great success. I know many clients that took it, that needed it, that it was good for them. There's still certainly some uncertainty still around in terms of the necessity requirement, the audits that are still pending for loans over 2 million, with obviously the SBA, this itty bitty small agency that is really not used to that kind of volume of transaction is so overwhelmed with this, and at no fault of their own at all. But also they were just commissioned to administer this. In terms of a ranking, I would say that the second most successful assistance that was out there, and that is still out there, was, for example, accelerating tax refunds. You had the opportunity to, even though we had our big tax reform at the end of 17, effective 2018, you now were able to temporarily carry back losses again and request tax refunds for those losses. Whereas absent the CARES Act and absent COVID, you were not allowed anymore to carry back losses and get taxes you paid in prior years refunded. So that, through a certain process, happened very quickly. So that meant cash flow for businesses, as well as getting the good old alternative minimum tax if you still had some credits there, you could get that refunded on an accelerated basis. So that helped. It was all about cash flow for the businesses, right? It doesn't mean anything to you if you save some tax in 2 years of time. You needed cash right now in your bank, and then that was certainly achieved by the PPP, forgivable loan, as we all know, as well as those acceleration of those tax attributes and refunds. There were other programs as well, employee retention credits, payroll credits for if you gave employees time off for either being sick of COVID, or now it was re-implemented if you get vaccinated for COVID, to get tax credit there. That certainly helps, but in the greater scheme of things, I think the PPP program was certainly the biggest one. On the personal side, the stimulus checks received the most notoriety for people that got them. I am not the economist to really judge on what happened with that. Was it a good thing or not? Did it really help out a lot of people? I think what probably helped more was the federal unemployment. But with the caveat that you mentioned already, if I make more unemployment than my wages were, then there's an imbalance there. And President Biden very explicitly addressed it this week in a press conference that people need to go back to work if they get an offer. That's for sure.
Yeah, definitely. Then Antonello, what kind of feedback are you getting from your customer when it comes to the impact of the latest measurements of the administration on their business? Because I mean, you work predominantly also with SME companies, so that will be really interesting if you can share some insights with us.
Absolutely. It's very, very interesting question. And also, if we see what the other colleagues said before about the stimulus checks and the PPP loans and whatever. So just along a little premise, because as I told you, as Deutsche Leasing, we work predominantly with German subsidiaries and with German manufacturer, and our customer portfolio operates mostly in the fields of construction, automotive, packaging, and manufacturing in general. So all the evidence that I can share you comes from those sectors. But that being said, it is undeniable that our clients has benefited enormously from the current stimulus policies implemented by both the previous and also the actual administration. Surely directly from, as the colleagues mentioned before, the PPP loans, but also indirectly, you know, when we look to all the stimulus money that has been pumped into the system and the ramp up of the vaccination that has led to positive expectation in the economy, this all had a big and positive impact on our customer base. I can tell you, if we look at our delinquency rate, that is the which measures the share of our portfolio that is in arrears with payment, it has been the lowest since ever. So we never had such a low delinquency rate. Our customer in the construction sector, they really had their best year since ever. Our vendors, they never sold as much machine as of today, and so this was really positive. And when we look at the German subsidiaries, I can tell you that you know, before the pandemic, we had a lot of discussion going on with some prospects that wanted to invest here in the US. We are talking about greenfield projects, and a lot of those projects were put on ice during the pandemic. But thanks to, you know, this is an indirect effect of what the administrations have done since yet. But we are back in discussion with those guys. Those guys are looking to come back here to invest, and also the pressure, or let's say the focus of the Biden administration on the Buy American, Made in America. I think this might indirectly, for sure, attract new investments here, even if when it comes to foreign direct investments, the most measures are put in place by local governments, by the states. But for sure, we see that the administration wants to attract here jobs, want to companies to come here and to invest here. So this is for sure something really positive. Even if, on the other hand, we have to say that the travel ban, for example, that is still in place, is a little problem for those companies who are not here. Yes, there are the national interest exceptions for sure, but the last process to get there is really a pain in the neck, we have to say. So it's not that easy. And we have also to say that even if those measures were largely positive, we have some customers that are starting complaining. For example, and you mentioned before in the construction sector, the Association of the General Contractor lately stated they are not able to find working force. We had several customers that had to turn down jobs because they were not able to find the employer to do this, to perform the jobs. And another thing that is happening is that they are observing a surge in the prices. Last month, just in the buying material went up for 5%. So there is also an inflation risk that needs to be considered. And yeah, these are mostly the main thing that we are observing now.
Do you also see, or do you think, based on your experience, that from the companies that express interest now in financing and entering the US market, that we are at the same level as we were in early 2020, or not yet there? So what is your prediction? Do you think that we can hit that number at some point this year, more towards the end of the year, or maybe early next year?
2022, I think, because typically, so we have to distinguish between companies who are already here or investing here, and they are back. They are back, they are looking back for their investment. But those who wants to enter the market, they are still in a process in between, because pandemic is not yet over. So yes, we are here, we live in the US, and we live the let's say positive information that are around. But if you look back to Europe, this is not the same. So there are still, and Europe, it's ramping up, but there are still some countries in Europe and also Germany that are struggling with the economy. So I think that, and we observed this also in 2007, during the financial crisis, that the investment of the German companies here went really down. And then in the years after, we had really a bounce back. So the expectation is that in 2022, we will see a lot of positive thing, I think.
Okay, thank you.
You have to also consider Antonello, the whole interconnected world economy right now, with India obviously struggling very, very hard.
Absolutely.
Very big player in the world economy. China, I mean, who really knows what's going on over there? The numbers reported are really probably not accurate anymore since well over a year, or there's simply nothing reported. But all that plays into the German parent companies. There's not only the US-German relationship. There's a lot more that diverges from Germany all over the globe.
Right.
Absolutely.
Antonello, along those lines, oh, sorry, Gerrit, can I
go ahead, please.
Antonello, along those lines, we're hearing a lot of customers talking about obviously frustrations relative to supply chain. The beauty of the global economy is that you have access. So a lot of clients here, particularly on the manufacturing side in the Midwest, are saying, we'd kind of like to domesticate a little bit more. Do you think that will drive some foreign investment in the United States, that German companies saying, hey, we're willing to do an investment to kind of latch on to the domestic production process, as has been true for, a lot of other manufacturers like Volkswagen, and, there's plenty of examples of that. Do you think that'll be a driver?
Absolutely. I'm convinced that this will be a driver. Even if you look at the automotive sector, there is now a big issue going on worldwide, which is the shortage in chips. And I think that this might bring in the short term to, I heard of customers that they had to stop or to reduce the production because they are not able. And if we look also to the prices of the cars, it's not possible to find a new car up to today. So it seems to be back in Germany, where we had to wait 9 months to get your Mercedes when you were ordering your Mercedes, right? For those who have been in Germany. And this is one of the main issues. This is a worldwide issue because there is really a shortage in these chips, and building up this supply chain is not easy, because also the manufacturer of the machines of these chips there are just a few of them. I heard that some US company were looking to building here some supply chain just to bring it back here, because most of those chips are produced, I think if I'm wrong, in Asia, Taiwan, and whatsoever. But it's not easy because the machines are not available.
And then also relating back to the supply chain, I mean, logistics costs are depending on if it's air freight, if it's sea, or even like trucking rates here in the US, for instance, they increased tremendously. I mean, not only through Corona crisis, but just the trucking costs even before Corona. So this also plays a factor in the pricing strategies. And I mean, if we stick to that topic and we also take a look at, for instance, the M&A market, I mean, the M&A market last year, for instance, was some sort of like a roller coaster, like a little bit up and down, I would say. But I think now this year, and Dan, maybe you can tell us a little bit more about that, but this year it's really also a hot market. And I would assume that it also goes at least into 22 and 23, because there some companies are out there that are maybe in distress and they look for foreign investors or other investors. Then a lot of companies are out there, they think, and they in their strategy book, they want to diversify. So maybe to buy in a competitor, buy in a different industry sector to get some more synergies, but also European companies or predominantly German companies now planning to enter the US market, speeding up the process, and instead of having a brownfield or a greenfield, just acquiring one local presence here with the infrastructure, with the sales system, with the employees, the machines, everything ready. I know that then you mentioned you work with family office here in the US. So can you tell us something? Do you see any specific increase in interest transaction from maybe family offices from Europe, or do you also see from your clients interest in vice versa, so export business acquiring European companies?
There's no question that that people are opening their minds to conversations when it comes to creating partnerships that probably would be things that were unthinkable even as recently as a decade ago. I think all of us have gotten much more comfortable creating pretty close and effective relationships in a virtual environment as we're experiencing as we speak today. And so creating a partnership with someone that's in Europe or even in a place like New Zealand, where you might not ever go just because it's hard to get there. You're not allowed to go there anyway, but it's really, really far away. We see a lot of families who are doing that. But I think, Gerrit, the M&A activity has a number of factors that are really driving this in the United States. One of them is that the average age of business owners is getting a little bit higher, and so the silver tsunami is a phrase people are starting to use. Add to that the emotional element of people, and again, I talk to at least one business owner a week who says, we had a pretty good year last year, and I know that I can rebuild my infrastructure or kind of retool or readjust, make some of the strategic investments, Antonella, that you talked about a little bit ago. But they say, I just don't have the energy. I don't want to do it. I don't have the drive. I think about that restaurant I was at today. I know the owners, and they're wonderful people, but they've got a tough task ahead of them, and they've had a really, really difficult year. So recruiting good employees, dealing with a lot of different issues. So I think it's an emotional challenge. A lot of people in their early 60s who are business owners are looking around and just saying, I know I can do this, but I really don't want to, right? And so I think that's a factor. Add to that tax volatility. We're talking to business owners, if they're considering a sale right now, essentially the top capital gains rates are about 20% for most people who are selling at a federal state. But if they're selling for more than $1 million under President Biden's plan, potentially that number could literally more than double for next year. So people are saying, I really want to kind of get this to be a known versus an unknown quantity. And so that's, I think, what people are looking at on the M&A side from the supply side. People are saying, I'm going to consider this. The other piece, Gerrit, you referenced it before, is that the demand side is also absolutely crazy. I had a chance to talk with one of my colleagues who outside of the bank who works for a fund, a large fund, private equity group, and he met with an individual who represents some large interest in the Middle East. And they said, we really want to buy in. Your fund has done really well. We'd like to be an investor. And he said, that sounds great. We'd love to have you in for like $100 million. They're raising $1 billion fund. And they said, no, we were thinking like 400 million. And my colleague said, well, we're not really sure. That's more than we'd probably want. And, we'll let you know over time how much. And when we do capital calls, we'll kind of gather those assets over time. And his friend visiting from the Middle East said, no, I have a check with me today for $400 million, and I need to give it to you. So they didn't do that, right? He said, well, I'm not taking that check under any circumstances, for lots of other good reasons. But at the end of the day, you just see that that's what's happening, that there's cash that's available everywhere. And that's why we're seeing some cross-border partnerships. People in Europe are saying, look at the 10-year German bond numbers, and what are our other places that we can do investments. So I think that's the other piece, is there's so much cash on the sidelines. There's a huge demand. And so that's part of what drives the conversation. And a lot of family offices saying, hey, we'd love to be exposed to the market. It's great, but we want some other investments that could be long-term investments. And we want to do that again on all sides of the ocean. That's a great phenomenon to experience.
Mm-hmm. And, if you acquire a company abroad, of course, you normally want to go abroad, you want to see the company, you want to take a look around. Christian, for instance, your firm is also involved in the due diligence process. Mm-hmm. So, a big part is not only like checking the numbers, checking everything around the company, if it makes sense, if there are any hidden debts, potential lawsuits whatsoever, but also, going physically and seeing the company, the facility, for instance, you acquire. Has your firm seen any changes, any hurdles now, thanks to COVID, that you can't, come to the US usually and do such transactions, have the one-on-one meetings, which I think is really crucial in a business decision process? Yes, we can do it virtually, but it's completely different if you have a face-to-face meeting. So in a due diligence process, did you see any changes, dramatic changes, or is the timeline, do the timeline increase, decrease in making decisions, or do they really say, okay, we express an interest, let's do part of the due diligence, but let's make the final decision once we can travel again and see you in person? Have you seen any changes there?
Yeah, there's certainly, so that is led out of our centralized practice in Atlanta, our due diligence in the M&A by our partner, Frank Weidenfeld. And there certainly in the initial stages of the pandemic, there was a lot of hesitancy with pending deals to now go through, just because of the general unknown that was ahead of us. I have personally seen a few deals going through even now during the pandemic. It is obviously hard to buy something unseen, right? And an investment of that sort, other than maybe the gentleman with the $400 million check, Dan, generally a German would not go in and buy something of that magnitude unseen. So that's
I don't think he was German, Christian, just to clarify. I can give him your name if you like. That's right.
Yeah, no, I can totally see how that conversation went down. And so that certainly put a little bit of a damper in it. And in terms of what we see in due diligence, even in the projects that are still continuing right now, we just wrapped one up. It just adds another layer of complexity to it. Is one, the remote work setting, that you may be only very isolated, you can see the business, not for long periods of time, but also just in doing your financial due diligence, there is now positions on the balance sheet that are valued completely differently, or experience a lot more scrutiny, right? Can you really collect all your accounts receivable with this uncertainty in the economy? Or well, gosh, you have a PPP loan on your books. Now we have to deal with change of control issues that are in the documents that you signed back last April. And now all of a sudden the SBA has to approve this deal. They have other things to do right now than to approve M&A deals. So that just adds another layer of complexity to really getting a deal to close at the end of the day. Yeah, so that was my experience over the last last half a year.
Okay. The M&A market is hot right now, but this is one side. But then the other side, what I've heard, and maybe Dan or anyone else from the panel has some information there. On the other side, we have a succession planning problem that a lot of business owner, they want to retire, and for some reason, they do not want to hand over the business to their family, their extended family. Maybe there is no interest in the extended family, or there is no family. How does it affect current businesses right now? And is there any solution to overcome the, well, if you want to call it this way, the succession crisis? I mean, Dan, do you have any insights?
Well, the silver tsunami, as we mentioned before, that's another huge element that we mentioned. And I think in the Midwest here, we get to deal with a lot of business owners who are either first generation, that they've created the businesses themselves, or that they're second generation. So they've been very involved in the creation of the business. They've watched, mom and dad put the business together too. And I think one of the effects of that is that they kind of experience the challenges associated being with a business owner. Being a business owner is and can be an incredibly fulfilling experience. My wife is a business owner, or as I like to say, I get to share a tax return with a business owner, which is, I don't think she finds that joke as funny as I do, but I think it's a great joke. But anyway, you experience it, you see it in real time. I think the other part is we've talked a lot about this. Business has just become much more complex. I mean, if somebody said to me, "Hey, the company you were ordering chips from," to your point, Antonella, as we mentioned, is going out of business or is unable to deliver those, you're going to need to find a new supplier. I'm not sure I'm well equipped to do that, and I don't know that a lot of other business owners have a lot more in the tank to be able to do that too. So I think as business gets a little bit more complex, people are saying, we're not able to handle this just kind of by ourselves. So that's, I think, two factors, one that's kind of more economic and one that's a little bit more emotional. The other part I think that's a big factor is we mentioned a bunch of cash on the sidelines. The market has done a better job of connecting willing buyers and sellers. And so if you're interested in selling your company, right now, again, the success rate still is about 20 to 30%. But I think after this year and after next year, we're going to see that success rate continue to go up because many more people are going to be willing to sell. And there are going to be a lot more people who have taken the time to say, if you're interested in buying, we can connect you with the right places. We're not quite to the eHarmony kind of level of buyers and sellers, but we might be getting a lot closer than we were before. So I think those are all factors too. And Tanel, you kind of touched on this a little bit before. It's got to be affecting your day-to-day business in many ways.
You mean the older people getting older?
Absolutely, yes.
So let's say that the funny thing is that the German economy, I would say, is a real success story of intergenerational handover. So you see, and especially within the SMEs, we have customer where you see 3 generation sitting together in the board management room, and that's crazy. So and as I told you, I have Italian roots, and I never saw the same happening, for example, in Italy. You have companies in Germany that have the surname of the family that are still owned since 100 and more years by the same family, and that's crazy how they are able to pass this heritage along to their hair. That's really crazy.
Do you think estate tax liability? I mean, that's one of the other two factors I think, Gerrit, that are relevant to this conversation are that, we have historically high estate tax exemptions. And so the cost of just passing from one generation to another is lower today. And if we see some volatility in that and it becomes more expensive to pass from one generation to the next in a kind of more gift format, then we may see more people saying, hey, I can't afford to just give this to you. The other thing that I think is an interesting factor is the success of the businesses themselves. As businesses have returned huge valuation numbers, it becomes really difficult. I had this conversation a couple weeks ago with a business owner. He was the second generation. He was talking about giving it to a very willing and interested generation, a third generation. And he said, my son just wants to inherit this, just like I did. And I said, yeah, I understand. Your father kind of gave you the business. And he said, yeah, except when my dad gave it to me, it was worth like $250,000, and now it's worth $20 million. There's a big space there in between what that gifting kind of looks like. And so I think as the American economy has had some success, that transition becomes more and more difficult and more expensive on the tax side too, potentially.
Interesting that you mentioned the tech side, because the Biden administration has, as you know, implemented various policies, and they also have announced that according to the tax plan that Joe Biden has released, that they want to enact a number of policies that would raise taxes on individuals with income such as above, I think, $400,000. But they also would raise taxes on corporations by raising the corporate income tax rate. So what bigger concerns are business owners now experiencing over potential changes in the corporate tax or estate tax? Christian, Antonello, Dan, I mean, you all have basically to think about it to know the answer for that for your clients. So what is your take on that?
Sure, Antonello, if you don't mind, if I go first.
Absolutely, go.
Okay. I mean, yes, it has a big impact, and somebody saying I want to raise taxes always on the face of it is a negative statement, right? Doesn't fly well with the business community. But if you really dive deeper and allow yourself a step back and a reasonable assessment of the situation, so the current federal corporate income tax rate, if we just talk about the corporate income tax on the federal level, it's about 3 years old now, right? It was enacted end of 17, the current 21%, and effective 2018. So we're in its third year now, or in its fourth year, actually, to be honest. And certainly was the largest, I would say, legislative victory of the prior Trump administration and the then Republican Congress, for sure. Prior to that, at least the highest tax rate was basically 35%, or in the vicinity thereof. There were tax brackets, it wasn't a flat rate, but let's just call it 35%. And it appeared to put the US at a competitive disadvantage globally. If you look at all corporate tax rates in the industrialized world, for example, in the OECD world of industrialized nations. But if you really put this into perspective, the tax code in the US allowed for so many perfectly legal ways to reduce your tax burden that the effective tax rate was much lower. For example, using a research and development tax credit, just to name one. In fact, it was in such a way that, to quote I think it was the Congressional Research Service, so a very credible agency that its purpose is to assist congressmen in assessing data. In 2014, so that was the pre-tax reform 35% tax rate world, they assessed that in 2014, under the old tax code, the effective tax rate in the US was actually just 27.1%, even though the statutory rate was 35%. Whereas the average OECD world was 27.7%. So we're actually below the average of the OECD world, even with a statutory rate of 35%. Germany around 30%, if you count all of it, the trade tax and the solidarity surcharge. If you count it all in, you were actually higher in Germany, even under the old code. So that has to really be put in perspective. You have to detach yourself a little bit just from that sheer number of what is the statutory tax rate at this point, which is obviously hard to communicate in a political world, in a media world where you just are in 15-minute news cycles, right? What I think is more important in a tax plan, and that hasn't been really concluded upon in the Biden tax plan that is proposed yet. So, I mean, just to recap real quick, Biden proposes 28% from now 21 to 28%, which is still below the old rate, but certainly higher than the current rate. But he also wants to impose a 15% minimum tax, which is based on book income. So whatever your book results are, which are much more steady than tax results because of, you know, bonus depreciation, very high fluctuations sometimes year over year, but only imposes for corporations that make more than 100 million. So really the big players of this world, right? And it just to even out the tax cash flow a bit. But in a nutshell, you can't judge a tax plan just by the corporate tax rate itself. The effective tax rate I consider a lot more representative of the current tax environment and how competitive it is globally. If you have this effect of a high statutory rate and there are so many legal, I don't want to use the word loopholes, legal ways of reducing your tax liabilities through various concepts, it gets challenging for small and medium-sized entities compared to the Fortune 500 companies that have huge tax departments that do nothing else but taking care of that kind of stuff, to take advantage of these opportunities to reduce your effective tax rate to a 25, 26%, what have you. So the small to medium-sized companies feel the most of this increase of a statutory rate because they oftentimes don't have the opportunity. What I want to say with that is, I think what truly should happen is to eliminate all these ways of reducing a rate and just make it a more level playing field and fairer for all the players, being large or small, and then thereby having a good average effective tax rate. And the last piece was just my personal opinion. I want to preface that.
Main takeaways then, Christian, you need a good CPA, right?
Sure, yeah. So, hey, the more complex the tax code is, the better my job gets, for sure. But from really speaking about the success of an economy, the attractiveness of an economy in a global tax world, I think the simpler, the better, and the less loopholes, be it legal, the better, for sure.
Absolutely. But we have also to say that the US market is a huge market and it's a real attraction. And generally, I don't know, Christian, you for sure have a bigger overview than we have, but the revenues that are available in this country are much higher than, or revenue rates available in this country are much higher than in other countries. Therefore, I think that it's always interesting, at least I'm talking about my customer, German companies, to come and be here and become a US company, because, and honestly, we also observed this on the financials of last year. A lot of our customer, the parent company in the US were having much better figures than the subsidiary were having much better figures than the parents in Germany.
Do you think one of the other factors, Christian, I agree, having a more stable and understandable tax code overall is really important. Good for clients, bad for those of us who do advising, as you mentioned, full Employment Act, as we talk about. But I think the volatility piece is a big one too. Don't you hear a lot of clients saying, I looked at an estate plan the other day that somebody had executed in 2009, which doesn't sound that old to me. I'm sure I've got a majority of my, shirts upstairs in my closet that are at least that old. And people were saying, and I mentioned to the client, he said, this isn't that old. And I said, there have been 2 major estate tax changes since you executed that document, and we're ready to do a third. It seems like that's part of the challenge. Would you say that the volatility is there? I think people would much prefer stability, knowing what the rules are, knowing what can happen, even if they're not perfect, and they never will be. But stability is there. We want a tax code that's as predictable as Angela Merkel's haircut, right? I mean, that's what we really desire. I think most of our business owners.
My personal take on that is that I want to say over the last 15 years, and this is more of a political answer I'm giving you now rather than a CPA's answer, that we've seen such a polarization in the political areas, Democrats versus Republicans, red versus blue, that there is increasingly less collaboration, and it's a very black and white thinking. And so when the one side has the power, they do it their way, my way or the highway. and the other side is blocking everything, and vice versa, depending on who is in. And if there is not collaboration going on, then you have these swings to the extreme on both ends, depending on who is in power, which is not the stability you're looking for sure.
Agreed.
Comparing it to Germany, Germany has been in the unusual political circumstance of having basically the same two parties in power for the last going on 20 years now. So, and 16 or so of that was under the leadership of Ms. Merkel. So that, some people say that prohibits progress, but the other flip side of it is a lot of continuity. That is the result of it, and businesses, that is probably something they like to see, because it makes the future plannable. Yeah. I would not consider, though, the US as a environment that has an unplannable future. Quite the contrary. Sure, and I mean, a tax reform that we had recently in 2017. Yes, it was a big one for sure, but it's not like a reform like that happens every 4 years, depending on who has the majority in Congress. I mean, the last big one of that magnitude was the one from Reagan, and I want to say 86. Mm-hmm. So just to put it a little bit in perspective, cannot comment so much on the estate tax side because we try to really shield our clients from US estate tax through setting up the right entity structure, so that it's not a US topic and it remains a German topic for them whenever they want to pass it on.
Unfortunately, we are basically almost on time right now with our panel. I mean, we have not covered everything that is out there regarding this topic, such as e-commerce. I mean, the e-commerce market is booming tremendously. The numbers that the e-commerce market is currently basically bringing in is the number that we would have predicted for 2023 or 2024. So a lot of companies had also to shift their business, of course, in the EE sector. That also affects their taxes, maybe because they have a nexus maybe in the state. They wouldn't have a nexus before. There are so many other factors we can talk about it right now, but I encourage everyone in the audience, if you're interested in more of this topic, please feel free to reach out to us. So either to me or to the panelists today, so we can have maybe an offsite dialogue and can continue to talk about all the different topics. Also, for instance, Antonello mentioned earlier the risk of an inflation. That's also a topic, unfortunately, we have not had a lot of time to cover today. But the next 5 minutes or so, I also wanted to give the audience a chance. If you have any questions that we have not covered yet, or that you want to add on to what either Christian, Antonello, Dan, or myself, what we said, please use the chat function, or even just unmute yourself right now. Please quickly introduce yourself and then ask your question. So I would use just say next 5 minutes or so to give the audience also the word. Any takers? All right, I don't hear anyone. I don't see any questions in the chat function. Then I would just use the chance and say thank you very much, Christian, Antonello, and Dan, for being on the panel today. For everyone in the audience, thank you also for joining us, either for this session or also for our previous sessions. I can only invite you to take a look at our website under events. We have a lot of great events coming up in the next couple of weeks and months. I also want to thank Rödl & Partner, because they have been a sponsor today for this panel. So many thanks for that. And if no one has any questions, then again, thank you so much for joining us. Have a wonderful evening, stay safe. And if you have any questions in the future, maybe that comes up tomorrow or over a conversation on the weekend, feel free to reach out to either myself or all the other panelists. And again, thank you so much for joining us.
Thank you, everybody, for your.
Thank you. Thanks, everybody.